Okay, so let's talk about interest rates, kind of the direction that we're headed, and what's to come next. So, as you guys heard today, we heard from the Feds that they are going to plan 3 rate decreases in the year of 2024. They've already started to do that essentially in the last couple of weeks, really last couple of months. You'll kind of see that outlined here. Now, what you're seeing on the chart, just to kind of explain it simply put, when we were up here, this is when interest rates were at 2.5%, 3.5%, really low. Now, the lower this falls, the higher the interest rates go. And so we got down to a real critical level here where we fell below this red line. Now, what this red line essentially is telling us is that on the entire history of the mortgage-backed security bond, this is the most critical level of support that we did not want to fall below. And that is derived from how many points where the price has touched in the past and hit that level. And so where this red line is, this is the most touching points where I can put the line where it will actually hit as many times in the most amount of order as possible. Another way to say it, essentially, this is the most amount of times where the red line will touch and where it essentially will go out to into the future. So right here you can see, and it's kind of hard to see because it's small, but if we zoom in, you'll see it just touches this point over and over and over and over and over again. I can't put this anywhere on this mortgage bond in the same spot where I have enough contact points that quantified to be higher than what it's currently at. So now we get to the current day, or essentially towards the end of the year. We fell below that line. That's when the rates really got really bad. That's when they were into the 7s and the 8s. But what has happened, and it's played out really since about middle of October till now, is we've made our way back above that support line. And the great news is that when it went to retest it to fall below, it did not fall below that point, and it's continued its trajectory of going back up. So the higher this goes, the better interest rates are going to get. So what does this actually translate to? Well, what it translates to is that there's a very good chance that we're going to see rates into the 5s, probably 4s here sooner than later when it comes to government loans, mid to high 5s when it comes to conventional loans. But nonetheless, rates are getting better. So for all of those that have been waiting or been on the fence with interest rates, it's starting to go back your direction to where you're going to have a little bit of a lower payment. So if you haven't checked what rates are recently, or you haven't seen what your payment is recently, definitely do so. And for those that have already bought and have that higher rate currently, best part about it is now that you have the house, you can always refinance and bring that payment down. Of course, we'll reach out to you when it makes sense to do so. But nonetheless, this is the direction where we're going for interest rates. The Fed funds, or I'm sorry, the FOMC meeting, or the federal meeting that was held today, they announced that there's going to be 3 rate cuts in the year of 2024. Whether there's 3, whether there's 6, doesn't really matter. The fact is we're going in the right direction, and we're going to see lower rates to come here sooner than later. So sit tight and wait for the rates to come down because they're coming.